Um, all right, thanks for it. A, first of all, thank you so much for organizing. And B, to everybody who's joined. I don't know where you're joining from. If it's India, then I really appreciate your time on a Friday night. And, uh, and if you're joining from somewhere else, just happy to have you on board. So let me just kind of quickly introduce myself and then I'll get into this. So my name is Shiv. I grew up in the mountains in Kullu, which is where I am right now. I have kind of had a pretty rangy experience. I've worked with Coca-Cola in sales, marketing, general management. Then did an MBA from Wharton. I then moved into finance. So I've got some technology investment banking experience as well. And most recently, I've sort of gone down the crypto rabbit hole. And currently, I lead research for the Colossus Web3 Breakdowns podcast. So Colossus is the company that that's behind Invest Like the Best. Patrick OShaughnessy's Invest Like the Best, and so it's been a fun experience, kind of being part of this new space and this new property that they've launched. Our host Eric Golden is in fact a Bored Ape Yacht Club member, which is kind of what we're going to discuss in the session today. And so, really excited to just kick it off for everybody. So I've got a small presentation. I'll just share screen. Can everybody see it? Varya, can you see this?
Yeah.
Okay, awesome. So I at this point, if you haven't sort of heard of NFTs at this point, I have to imagine that you're living under a rock. But like Varya kind of alluded to at the beginning, it's totally a concept that, I thought I'd wrap my head around, but then every time something new occurs that, becomes difficult to kind of understand. And so you're not A, alone, and B, you're not late. NFTs are really early right now. I think something like only 0.0009% of the total internet users in the world own NFTs. So it's a good time to kind of understand this pretty foundational topic. Last year was big. NFTs was big. You had you had more than 18 billion in sales, and this is the current market cap of that. And so just a ton of NFTs. And I'll keep going quick so that we've got time for questions and discussion at the end. But if you kind of just quickly look at the chart, you're seeing that the big categories are avatars, games, gaming, for art and collectibles, and then a bunch of other stuff. So my goal for this session is just simply this. It's to make sure that I think the frame of reference through which you can evaluate NFTs, whether it's a project you're looking at right now or whether it's something that's going to come down the line, that you're clear on the frame of reference. And what we'll do in this session is, once we've sort of established these foundational concepts, we'll then go deep into one of the projects, which was a pretty seminal project this year, which is the Bored Ape Yacht Club. So that we're not confused like Gollum and Frodo. So what was the great innovation of the blockchain? It was that it gave people property rights on the internet. And why is that important? Property rights allow you to transact, to exchange something of value. Property rights allow you to use that property as collateral so that you can either lend something against that, or you can borrow something against that. And so it unlocks all these different ways in which you can transact. And so blockchains are really, that's why they call them the Internet of Value, because so far as through the first version of the internet, we figured out how to send information across the internet. But through this version, through blockchain, we figure out how to actually send value across the internet without a central authority intermediating that transaction. And so when you look at property rights, NFTs are the perfect encapsulation of that. And essentially, you've got three models that I encourage you to just view NFTs through. It's either the right to represent a thing, it's the right to do something with a thing, and it's the right to expect certain things. These categories are not mutually exclusive, but they are more or less exhaustive. And so the source that I've quoted here is this guy on Twitter called Venkatesh Rao at VGR. I highly encourage you to follow this guy, but if you're not on Twitter, or if you're not sort of tuned into that, I've included this link, which we'll send out the presentation later on. So I encourage you to read this article for sure. It'll help really deconstruct a lot of these concepts. So what does the right to represent a thing mean? Well, it could be art, which is pretty standard. It could be collectibles, so baseball cards, or any sort of trading cards that you can do, or any other collection that could be organized and collected. It could be avatars, stuff that you're seeing on Twitter with different people's profile pics. It could be your representation of patronage. Maybe you like a particular artist. They release a song, and then they release a token alongside that, which is representative of that song. And so they're getting value, or they're getting money from you, which is your patronage towards that song. And you get to display that token, that NFT, on your wallet without sort of without any sort of encumbrance. And then it could also be something as simple as naming a star after yourself. Like, that's what also tokenization is. And so this right to represent a thing is the version that you kind of see a lot of today. Then you also have utility-based stuff, the right to do something with a thing. And so you can have tickets. So your NFTs, your non-fungible tokens, could be used as tickets to go to events. If you hold if you're a member of a certain club, like say the Bored Ape Yacht Club, you can in the future be entitled to certain airdrops or certain other benefits, just like a club entitles you to certain benefits, except that in this case you're dropping this stuff through the internet, and you can program it, and it's really customizable in a bunch of different ways. It could be gameplay dependent. So you've got games where you're collecting all these cards, like in the case of NBA Top Shot, or in fact there's a cricket game also that's been released recently for NFTs called Phase or Fan Craze, which is licensed by the ICC. And so you're just collecting all of these trading cards, or you've got stuff like Sorare, which is fantasy football essentially, but you're owning these NFTs and you kind of battle and you're in leagues and you're competing. And so there's like a whole point system. Or at the end of the day, you've also got game assets. And if you haven't looked at Axie Infinity, we can talk about it in the Q&A later, but it's the most important, I think one of the most important things to have happened last year, which is representative of this concept called play to earn. Because again, the moment you can, have people playing these games in the metaverse, and the moment those tokens are exchangeable for value, you can have people, interacting in the real world. So then ultimately you've got the right to expect certain things. So again, you can expect in the future, like for instance, there are these dApps called Sandbox and Decentraland, which basically sell land or real estate in the metaverse. Now, this is based on the premise that someday, if for instance, like let's say there are plots of land, and let's say Snoop Dogg buys a land right next to you, then it's assumed that your land is going to go up in value. And so, again, this is the right to expect these things in the future. Or it could be like a future, Internet of Things, an IoT standard, where, for instance, if your domain name is, whatever it is, let's say it's shiv.eth, I can, through this domain, through this NFT, which is my .eth address, I can unlock certain things or I can be entitled to certain objects in the real world. Maybe I walk into a grocery store and I get something on my birthday, which is, it's as programmable as that. Or it could be like a future augmented reality environment, where with like a mixed reality, where based on these tokens or assets that you own, you can actually see different things in reality, which is pretty cool. Again, so it's again selective filtering of all of that. And by the way, if anyone's got any questions along the way, just feel free to interject. But I'll keep the pace going. So
there's one in
as you
the
see,
chat. I can quickly pick it up. NFT tickets, does it work for physical events or is it for virtual metaverse events only?
so right now, a lot of people are experimenting with like metaverse. It's called token gating, which is if I hold the token in my wallet, the program can independently quickly verify it and then allow me access into that virtual world. But in the future, it might be as simple as, you're at, for instance, you're at a real world event. And suddenly you're in the crowd and it's detected that you're there once you sort of sign into the Wi-Fi or you're connected into the internet. And you could be airdropped a special thing during the game itself. And then, you just go onto the big screen of the game and they'll get a reaction or something. So real world experiences can be linked into that stuff inside the game. And then it can also be linked in at the game. Let's say you're, in a certain neighborhood, or you're, because you also kind of are overlaid with Google Maps. And so that sort of identification, that bridge to the real world might become more and more commonplace in the future. And there are some startups that are starting to do this. I think a recent one that I'm not sure whether they got funded, but it's called MetaPass, METAPASS, which is trying to do something around NFT ticketing.
Have a related question, Shiv.
Mm-hmm.
So, I mean, what do you think about brands using NFTs to gate their communities, let's say, or VIP programs? Where would this fall under the three mental models that you described, or the categories that's on the screen right now?
Right. So again, it kind of gets into that utility thing. So the first wave of all of this was basically this representative model, right? This agency, the signifier model. The second wave of it which is I think where the user experience aspect of it kind of really broadens, is the utility. Are these things actually useful? And so you've got brands now. Let's take Adidas or let's take Nike. Nike recently, the name escapes me right now, but Nike bought something called Artifact, which is they design sneakers in the metaverse, but through technology and through augmented reality, you can sort of try on those, you can customize those sneakers, then you can try them on, and then you can actually have these customizable sneakers delivered to you in the physical world. And so brands are really latching on to this stuff. They do want to be cautious about not being super cringy or not kind of feeling like they're piling onto this train. But there are intelligent ways to do it, which is, I think, just kind of as like Nike and Adidas are good examples. They're fused in with the culture, and then they, take the culture and put that on a shoe. And so as you sort of, it's not just, your virtual assets where you can display these things, but that bridge to the real world is also going to be valuable. And for instance, Nike could say that this is a limited drop that we're doing. As long as you hold these tokens, you're eligible for another super limited drop that will be some collaboration that we have with, the most exclusive sneaker artist in the world, Cierto. And so that sort of stuff where you're bridging to the real world, that is also going to happen more and more as you go on.
Makes sense. Thanks.
Yeah, I think the phrase I want to leave you with is like the financialization of culture. And so it's think of it this way. When you buy things in bulk, they're cheaper. When you buy things in smaller portions, the convenience goods, they're more expensive. And the moment, like mathematically, if you break something from a larger whole into a smaller one, the surface area increases, right? And so you're basically, as we know with NFTs, because you can tokenize pretty much anything in the world, you're increasing the surface area of commerce. And because the blockchain is composable, which means that it's like Legos. You can, it's all open source. And so you can use stuff and build, using one open source thing, and you can build on top of these things. So because of this aspect, you can also remix it. So not only has the surface area of commerce increased, but the ability to remix all of these things and, fuse and just kind of mix and match, that's also increased a lot. And so naturally, that's going to spur much more commerce.
There's another
Got it.
question in the chat. Does the concept of NFTs apply only to full digital ownership or to partial digital ownership too?
So good question. So there are models now developing where in some cases NFT assets have just kind of become too expensive. Prime examples would be these collections like CryptoPunks and Bored Ape Yacht Club, where the prices are sometimes in the millions of dollars. And so you've got a bunch of people coming together and bidding for an asset. And unlike sort of the model of the world that we've been living in, where to invest in anything, you have to be accredited and you need to kind of go through these special purpose vehicles that are all regulated. Right now, regulation hasn't come in here. And because everything can happen really quickly on it, on the internet, you've got companies like Party Bid or Party Round, I forget the exact name. But basically, these companies facilitate large groups of people coming together and bidding on, assets like CryptoPunks and Bored Apes. And it all sort of represents, and I think in one of the cases where there was this one super rare, I think it was a punk that was going for a lot. This group of people, this motley group of strangers who've never met each other, don't know whether, haven't really, they're strangers to each other. They outbid somebody, one of these premium bidders or one of these big whales, NFT collectors. And so it shows, that whole power to the person mental model. This is just like it's just, playing out in real time where because through the blockchain, you're able to facilitate all these different interactions. You're able to get a bunch of strangers to, essentially coordinate frictionlessly. I'll keep going. So again, your top 3 categories by volume are again these static NFTs, the avatars, the art, the collectibles. But over a period of time, this gaming and utility aspect of it, which you're seeing on the screen right now, this stuff, I'm very bullish on, and I fully expect this stuff to go up in value because today the early adopters base has adopted these things, and they're still pretty niche and exclusive. But over time, if you really want mass adoption, it'll have to be through something that 10x is the consumer's delight or utility, and that's going to be gaming and the stuff that we discussed around brands providing utility in some way or the other, and that sort of thing. And again, we can get into more of these ideas in the Q&A later on. So the thing I want to discuss here is today is March 11th, and it's actually kind of appropriate that the whole NFT craze actually got kicked off exactly a year back, thanks to Beeple. And you may have heard of this already, but there was an Indian buyer or Indian origin buyer called Metakovan who bought this for an absurd amount of Ethereum, which in US dollars at the time was worth $69 million. It's Beeple, for context, if you don't know, was an artist who was creating these virtual artworks every day, one artwork a day. And I think this painting's called The First 5,000 Days. And so this represents the first 5,000 artworks that people had created, for the past for like 5,000 days. And so this thing sold for $69 million. This really brought things into the limelight. And since then, the price of Ethereum, the price of NFTs, etc., just like skyrocketed like no one's business, as you'll see. And why is this moment important? This was sort of, if I kind of talk about a really, really quick history of NFTs, you've got, and again, I'm going to leave out quite a bit because we don't have that much time. But broadly, if you look at sort of the seminal projects that came out of it, you had CryptoKitties, which was again a Pokemon type sort of trading card game, but it ran into some issues because the Ethereum network got congested. But that was in 2017, but that really sort of opened up people's eyes to the potential. But then you had the great crypto crash of early 2018. And so things just died down. Everybody got washed away. But some people kept building. This project here from Larva Labs is called CryptoPunks. And this is, one of the preeminent, maybe the preeminent NFT collection project in the space. One of these things sold for, I think, $7.5 million. And some of these other things also sold for absurd amounts. And as you can tell, they're just pixelated, things, pixelated images, which you can right click and save. And so this thing happened in 2017, 18, maybe I think around that, but feel free to correct me on the timeline if I've got that wrong. But basically what happened was that seeing this project and then seeing what happened with people, a lot of people started getting inspired around, let's just, we missed out on the CryptoPunks. The original people who got these CryptoPunks basically got them for free. And so let's just, let's just create our own collection and let's just, try and see, maybe it's for us. And so in the aftermath of Beeple, which was March 2021, March of last year, you had two people from Miami come in and create this, this whole sort of history and mythos around a collection of 10,000 apes. And the premise was that the CryptoPunks didn't really have any sort of history to them. They didn't have any backstory, they didn't have any lore. And so why don't we try and create this programmatically generated art collection? And let's give it some, let's fill in the color. And so as you're seeing on the screen, they kind of talked about this, some distant time in the future where everybody's a crypto billionaire. And they're just kind of lounging around, and where do you lounge? You lounge at the Bored Ape Yacht Club. So if you look at it, it looks pretty cool. And so these guys, these two writers from Miami, got a hold of two developers and two programmer friends, and they just launched this collection towards the end of April called the Bored Ape Yacht Club. This is what the Bored Ape Yacht Club looked like. So if you look at this collection, which is again programmatically generated, you're seeing like there's a bunch of different attributes. You're seeing somebody has an earring, somebody has golden fur, somebody has some eyeglasses of different types. They've got other stuff around teeth. You've got facial expressions. You've got headgear, that sort of stuff. And so you've got a bunch of different attributes that are there. And the idea was that just like in art collections, or in trading cards, things which are rarer or attributes that are rarer tend to get priced higher. Maybe you can sort of get people into this whole ethos of collecting and ethos of just trying to figure out which attribute might be rare and guessing around that. So towards the end of April, they launched this programmatic art collection. It's living on the blockchain. At the time of launch, which is end of April, it was just like, I think maybe 500 people had actually, minted, or 500 apes had been minted in the pre-sale out of 10,000. So literally zero interest. Now, what is minting? Minting is the creation of an NFT on the blockchain. With these programmatic art collections, you actually, when you minted it, you couldn't see what you had minted, except knowing that you've actually secured this, this token, this NFT. But you could that reveal only happened a week later. So the reveal, when the reveal occurs for this thing, a week later, people see that this artwork actually looks pretty cool. And so, the collection sells out virtually overnight. And I want you to remember this price. People paid 0.08 ETH, which is $200 equivalent at the time, to mint one of these apes. So what happened was people the OGs who were like already in NFTs for a while, these guys, minted like several hundreds of them. And whoever else could get an ape ended up, getting one. And so, remember that figure, $200. So this is end of April, the collection sells out. Slowly on Twitter and on Discord and all these other places, people start changing their profile pictures to these apes. So this begins take, this catch fire, and again, in the aftermath of Beeple, Ethereum is rising, NFTs rising. And so what the makers of Bored Ape Yacht Club, or the creators of Bored Ape Yacht Club, Yuga Labs, decide to do is they also airdrop to each holder of an ape. They also airdrop 10,000 Bored Ape Kennel Club tokens, because every ape needs a companion. Now, and we'll understand in a minute why this is important. So these things are now starting to spread like wildfire. Celebrities are starting to come in, and just to get like a sense for who all have sort of been in the club, you've got DJ Khaled, you've got Mark Cuban, you've got Snoop Dogg, you've got Steph Curry, you got Post Malone, you got basketball players, you got like a ton of people coming in. I think not included here is Shaq and Jimmy Fallon, and several others kind of came in. But basically, like, celebrities started just hopping on into the NFT craze. So naturally the price skyrockets. So what happens is, in the secondary markets, these tokens start trading for like insane values. So that $200 which you minted then, by I think around May or early June, was already worth something like something in the $20,000, $30,000 range. So it's already like an insane figure from 100x from when you got it, and it's only going up from there. So what these guys ended up doing, the hype train kind of kept going, and so they airdrop more stuff later on, which was these mutant ape serums, which had like potential to mint a bunch of different tokens, and they launched another 10,000 tokens alongside it. So net, you've got 10,000 Bored Apes, you've got 10,000 Bored Ape Kennel Clubs with 10,000 of these dog tokens, and then you've got another 20,000 of these mutant apes, who are all which are all trading now in the secondary markets. And so you've got 40,000 items there, and because all of this stuff has value, and these airdrops, these airdrops that you're seeing were free. So they basically, airdrop them value. It's equivalent to a company issuing shares, except that, you're not diluting anyone. It's just, creating money out of thin air. One of these things sold for $2.7 million sometime in early September. Can somebody guess which one?
Just taking a stab, the king?
Actually, it was the one in the center, because again, this is how like weird these things are, right? The expression was angry, which is odd and different. This is the first. I think this guy was probably held on for a longer amount of time, but this trippy fur was something that had just caught somebody's fancy. And so again, one of one. You just never know how these how these things get valued. And again, like, look at the derivative economy that it spins off. There are a bunch of tools called rarity.io and some other tools which help you sort of get to a score, which will determine how rare these things are. So anyway, Sotheby's or Christie's kind of do their auctions. I think there was an auction of 24 apes, which had there's an auction of 101 apes, which sold for like $24 million. So you get the drift. Things are going up, up into the right only, so up and up only. Then these guys launch a roadmap for this collection, where now again, going back to that framing of the right to represent a thing, do things with a thing, and expect things in the future. So the representation was through these apes. You're a member of this club, where these celebrities are there. You're doing things with it. You can, you will, through these tokens, be eligible to play these games, which might have rewards of their own. You can go to this massive, yacht that they rent out literally and end up doing, go to Ape Fest. There's a treasure hunt. Then there's there might be a real restaurant or a clubhouse that they end up buying in the future, and a bunch of other things around. It's like a whole full-fledged roadmap, including a DAO. And so you can expect things in the future as well.
There's a question. Have you done any research on the buyers, their economic background, job profiles, or education, or basically, like, are there any trends or patterns there, I guess?
I think the easiest way to say it is people who live on the fringes of the internet, like people who live on the fringes of culture, or kind of, on the edge of that. You have everybody from like writers to, unemployed kids in their parents' basement who are kind of members of this stuff, of these clubs, to, for like whales and legit people who are doing it as part of the original club, to Fidelity fixed income portfolio managers. Like the range is just extremely wide. It's basically anybody who was paying attention to this trend at the time. Today, of course, a lot of people have piled on, and you have like very sophisticated groups of people, like an investment club for NFTs, who are actually together and buying this. Stuff like people like Kevin Rose, the founder of Dig. He kind of has been in the NFT space for a while. Gary Vee had kind of been exploring this for a while. DAO, I think it was Flamingo DAO, which is and I might be wrong here, but I think it was Flamingo DAO, which is one of the original DAOs that kind of does investments in NFT. So you've got all types.
Great. I see Tanmay has raised his hand. Tanmay, do you have a question?
I don't anymore, actually. I wanted to answer the question about which is the most expensive one. I'd actually done some research.
Oh. Okay.
I have a question. So these apes are created by doing some kind of a programming behind the scenes, and then these are created, right? What if people are interested in understanding this kind of writing these logics, and then more number of people emerge in the world and creating such kind of arts or this kind of apes? So then the value of those kind of apes will get depreciating over the time, right? Then how will it be an valuable asset?
I mean, this is an excellent question, an obvious question, right? Like, there is like, these tokens are giving you property rights on the internet, but property rights basically imply scarcity. But to your point, if everybody can create it, where's the scarcity? And that's where that financialization of culture, the ephemeral part of what has captured the zeitgeist comes in. So just because this thing became popular, just because CryptoPunks became popular, just because Salman Khan became popular years back, they're valuable. And so, there is a Lindy effect there, where something that has, become preeminent or has come to the limelight is going to stay relevant or is going to accrue value. And to your point, there were so many copycats of these things that after the first few, it just doesn't work anymore, these collections, these 10,000 thing collections, because guess what? If status is a zero-sum game, and if you're not at the top of the ladder with a punk or an ape, well, you're not, there's no point being, in middle of the pack in status, because it is a power law game, right? And so this is that's exactly right. A bunch of these, the other collections, they have no value. I mean, people have created them, and again, the differential cost of producing them is so low that it basically doesn't hurt. But your intuition is spot on. A bunch of these things now don't have value, but this is one of the first ones, and so this has value. And chances are, this is my bet is that the stuff that became valuable at a moment in time, just like historical artifacts, became maybe the first copy of the Bible, maybe the Shroud of Turin, maybe the whatever artifacts are preserved, those things accrue value over time. But again, there are very, very, very few of them.
So you mean to say that until the people don't figure out that there is a clear distinction, that the original ones will have a value, but once they don't, if they look all similar, then the value might go down.
I mean, today, if somebody comes with a copy of the Bored Ape which looks similar, and by the way, there are so many, not only on Ethereum but also on Solana and other blockchains, they don't accrue value, because there is only one night. Any counterfeit of Louis Vuitton or Burberry or what have you, those things don't accrue value, right? They are counterfeits, and those copies don't have value. It's the same logic, the luxury brand model of it.
I have a quick question here. Is it a lot like, say, like actual physical artwork? Like, for example, there are ways in which you can sort of validate its authenticity. Like, there might be multiple copies of Mona Lisa, but there's one that's actually worth millions of dollars. So is it the same logic?
That's an excellent question, and my apologies. I should have covered this, at the start. That's exactly right. The value of art going onto the blockchain is that provenance, which is really difficult and expensive to establish, and you needed an intermediary for it, like a Sotheby's, or they'd kind of have the people who they'd send out to verify these things, or appraisers, etc. That stuff has now just been disintermediated thanks to the blockchain. The reason Christie's and Sotheby's, and sorry, what do I mean by provenance on the blockchain? It's because everything is open source and verifiable. Anybody can query the blockchain and find out, oh, this was the first copy of it, or this was the first time that this was created. And so it's very easy to establish, uniqueness or originality or provenance. That's the big value that blockchain has brought to the art world. Similarly, on the other side, on sort of, the trading card side of it, so eBay was like the collectibles marketplace, right? But the problem with eBay is that if you're collecting cards, etc., they have to be in mint condition when you receive them. They have to, you have to store them at like certain temperature. You have to then, ship them, distribute them, just kind of, and if, by the way, if any of those get destroyed, you're screwed, because that thing doesn't have any value. So with digital stuff, all those issues kind of get disintermediated. It just gets circumvented. And so that's why that's a big value add that blockchain's bringing to the art world, or the collectibles world. I'll keep going. So we discussed the hype train. This chart is up and to the right only. So if you look at, this isn't even, it's not a log chart, so it doesn't really show, but 0.08 ETH is not going to show up here. And if you look at the price, recently, I think Bored Apes crossed, the price floor is basically the price of the lowest priced ape, or the lowest priced NFT. So the lowest price NFT was going for like 100 something ETH. Now there's another dynamic here where Ethereum prices also fluctuate. And so the idea is sort of this kind of approximates to a fairly constant dollar value. So which is a way of saying that if Ethereum goes up, the price of, because these prices are denominated in ETH, the price is going to go down. And so, let's say something was worth 4 ETH, and at a time when the price of Ethereum was 4,000 US, so that's like that's $16,000. If, for instance, the price of ETH went down to 2,000, so in many cases the listed price in ETH is going to compensate, and it's going to go up to 80 ETH or somewhere there basically. So sometimes the bear markets run in opposite directions, and I think especially you'll notice this with these blue chip NFTs like the punks and the apes, the ETH and the NFT, the price of the ETH and the price of the token itself, they're sort of inversely correlated, because it's kind of approximating to this fairly constant store of value, but with a gentle, steady increase up and to the right. And so the prices here must have been like around 120 odd thousand US. I think around here they were like 160K, and now I think they're approximating like 200K. What is it today? It's I think around 80 ETH today. And so 80 times today's price is I think 2,500, 2,600. So yeah, it's about 200K. Let's keep going.
There's another question in the chat by Kanish. The NFT is usually not stored on the blockchain, but the location is. Are buyers not concerned about this? Most of it is on AWS. Does this not concern the buyer?
I mean, there's a really valid question, because I mean, it is the metadata that's actually stored elsewhere, and you don't actually kind of own this thing. You just own a signal. You just own a certificate on the blockchain that points you to, like you said, the AWS server. And so today buyers aren't really that concerned about it, because it is on the, because I think just the fact that it's like social consensus exists around the fact that, oh, you do own it. And you'll see a lot of stuff on the, like in crypto, even DAOs, for instance, they're decentralized autonomous organizations as far as the full form goes, but in practice, most DAOs aren't decentralized. They're not autonomous. They're just, it's a good marketing sort of play. And so a lot of this stuff right now is being figured out. They are trying to figure out like pure decentralized ways of doing this. But in terms of the market sort of response or feedback on it, I think people are very content with the fact that, like you said, the NFT is not stored on the blockchain. That's okay, as long as the location is, as long as the metadata is. I'll keep going in the interest of time. Unfortunately, I have a hard stop at 11.
There's
but
another
again,
question. Do you see Do you see the exclusivity of these NFTs and digital assets becoming more and more with increasing transactions on ETH for NFTs, since the gas fees would also become high and possibly exclude people who might not be able to pay that much?
There's definitely a component there. I think like if you look at the ETH versus the Solana NFTs, the Solana NFTs barely have any value. I think part of it is also due to the fact that Solana, gets rugged a lot, and that's because low transaction fees, right? So the scammers don't have to invest anything to, to put up a collection and then, scam people. And so you're absolutely right. Friction does make it more meaningful, and friction does accrue value to certainly the blue chip NFTs. And my sense is that the collectibles will probably live on ETH far into the future as well, but maybe the gaming NFTs or like use cases like social media, etc., which is basically very high frequency use cases. I think those are going to go off to chains which are more custom built for very high frequency, very high transactions. And so my intuition is that like the blue chip stuff can continue living on this in a high ETH gas fee world. Maybe somewhere down the line, layer 2 scaling solutions end up maybe you can shift some of these across as bridges, as this multi-chain world becomes more connected. But your intuition's probably right around the fact that gas fees would exclude people, and exclusivity does imply an increase in value. So again, volume is really high. Till date, FYI, the collection has done more than $1 billion in secondary transactions, which is insane. We'll get to the economics in a bit, and I'll talk to you about how much the creators made. Again, some of the prices here. You're seeing the top sales in today's prices. That's about $2 million, the 800th sale. Let's keep going. So, what's the value proposition? I think this is the quote that kind of really sums it up well. It has status value. It's the Rolex or the Ferrari, but it could be bigger. You could have Supreme, which is really this exclusive brand around clothing and apparel. That you could have like a decentralized bottom-up version of Supreme. Soho House, again, like an exclusive social place to just chill. And Dead Poet Society implies the sense of away from the mainstream. So it's still sort of under the radar and kind of cool. So if I kind of quickly sum up the value proposition, obviously social value that you derive from it. I highly urge you to kind of check out Eugene Wei and Packy McCormick's Status as a Service kind of play on all of this stuff. And so, but yeah, you've got social value here. You've got status from the collectibles or the art aspect. You've got belonging. You're interacting with imagine if Virat Kohli or like, I don't know, whoever you're excited about, is in the same chat as you, in the same club as you. That's pretty cool, right? And so you've got celebrities in this club. They had this whole thing around being anti-CryptoPunks because CryptoPunks were too expensive. And so the Bored Apes were originally conceived for people who couldn't get the punks because the punks were too, snooty and exclusive. But guess what? Now the Bored Apes are, the floor price of Bored Apes is, I think, more than punks. So, funny how things work out. And then the identity aspect of it, this looks like Gorilla's artwork. You've got these skins, these apes who we can take to different places in the metaverse. They've got their own lingo, which is part of in-group dynamics. It's entertaining, right? Investing is slowly becoming a status good. Oh, I've invested in Apple. I've invested in these things. Most people may not even be able to tell you whether or not Apple is a good investment at these prices, at this valuation. But I've invested in this exclusive or in this hot startup, or angel investing, the way that's taking off. Even though you know that on balance, the probability is really low that you'll make money. So again, back to that theme of financialization of culture. Financial rewards. Obviously, buying something at 200 and it's for 200,000 in 6 months. I'll take those investing returns any day. Thank you. They're thinking about launching more instruments like the ape token in the future, which is a fungible token. It's not a non-fungible. And again, my apologies, I should have said this at the beginning. Fungible means two things that are alike. So $1 is fungible for another dollar. Non-fungible means no two things are alike, like human beings, or these non-fungible tokens. So again, the ape token is going to be a fungible token, much like, you know, Bitcoin is fungible, or ETH1 or Ethereum is fungible, that sort of thing. This is basically to just, you know, widen the spread, because right now you just have 40,000 artifacts, which will probably owned by something like, you know, 17, 18,000 people, or 17, 18,000 wallets. And then collateral, you can kind of, you know, create, now that, you know, these things are starting to hold up value, you can actually create lending instruments out of it. Utility, again, access. It's like your Amex Black Card in you know, for a certain set of utilities that you might get from it. This is the part that I really want to spend some time on, which is, what was the killer value proposition? Why did Bored Apes in particular really take off? The coolest part about them is you're getting full commercial rights for your ape. Now, this is really interesting. CryptoPunks you could not license your individual punk out for something. Larva Labs prohibited that. If somebody had to license CryptoPunks, they had to deal directly with the master, with the creators of the brand, which is Larva Labs. But with apes, they said, okay, we own the master brand, we own the Bored Ape Yacht Club, or the Mutant Ape Yacht Club, but your individual apes, you have full commercial rights. You go do whatever the hell you want. So back to that idea of, you know, expanding the surface area, because surface area expansion leads to commerce expansion. And so everybody's enthused with the idea of, hey, this master brand's really popular. Think of it this way. If Marvel had come out with their own set of characters and you owned one of the characters, and Marvel said, guess what? This is after Marvel became Marvel. And they said, guess what? Your individual character, you can go ahead and license it any which way you want. That would be pretty exciting, right? Because you think of the possibilities and the revenue streams you can create from it. And so again, back to this whole thing of, you know, using your ape for your personal brand, merchandise, logo, anything I want, true ownership. That's the whole point. And so this is the first pro users or pro, you know, community usage of NFTs. And so where not just like the creators are getting rich, but people who kind of believed in the creators. So this is a really important idea for today's, you know, for like the world today, which is these community first brands, where you're distribution first, product next. Usually you need to create a product and then distribute it in the physical world, or even in the Web 2.0 world. But here you're saying, oh, let the community come around it, and then we'll, you know, create a product around that community. And with incentives, with the token ownership, etc., you're actually incented to, you know, to really further this brand. As the prime example of this, so you had a bunch of things from newsletters, podcasts, you had like a bunch of different spin-off projects. Prime example is this thing called Jenkins the Valet. Jenkins the Valet was signed by CAA, which is a Hollywood talent agency that represents, like, you know, some pretty powerful actors in Hollywood. And they said, you know, we want to sign you for the book that you're planning to create. And so Jenkins is owned by this anonymous person who's like a product manager at some tech company. And he owns this character, and he says, okay, I'm going to create, I love writing, so I'm going to start writing stories. So he started writing stories for Bored Ape Yacht Club members. And these are beautiful, like really interesting backstories to different people's characters. And as that was kind of going on, he tried to further the idea, saying, oh, why don't I just write a crowdsourced community, like a community sourced book? And so let it be the first of its kind. And so the idea caught steam, and he managed to convince a New York Times bestselling author, Neil Strauss, to partner with them to write it. And so this group, this club, who's now purchased, so Jenkins ended up launching his own token. It's called the Writer's Room tokens. And so these tokens entitled the community to vote on whatever creative direction that novel could take, which is, again, a really interesting idea of, and think of it this way, you already have IP market fit. So maybe if this book becomes successful, Jenkins can go to, let's say, Netflix and say, hey, I already have a group of true believers in this project of, like, you know, whatever, 10,000 people or whatever X number bought the book. And so Netflix is going to say, Netflix is going to be more incentivized to actually license the IP and use it in something, or, you know, purchase the thing outright to kind of create a show around it, because it already has some inbuilt, you know, brand cachet. So that's a really interesting idea that I want you to remember from today. So quickly on the economics, since we really have very, very little time left. These guys, their primary sales, they only made 2 million off the initial Bored Ape Yacht Club sale, but they did like 100 million off the Mutant Ape Yacht Club sale, which is insane when you think about it. insane. Like in a minute, in like an hour, they made $100 million by just airdropping these free tokens because they had cultural cachet. That's the insane power, right? Just creating money out of thin air. You're acting like a central bank. You're acting like Jerome Powell or what have you. And so they made $100 million from this thing, and they're not obligated to share this with anyone. It's up to them to reinvest it into the community, in which they are doing to some extent. But again, they made some good coin off it. And on the secondary sales, the way NFTs kind of have been getting structured is that the creators typically tend to make anything between 2.5% to 10% off each secondary transaction. And so in their case, they're making 2.5% of each sale. And so go back to that $1 billion figure that we talked about in secondary sales. So they made $25 million off of it. But this is in perpetuity. So in 1 year, they've made 25 million, but they have this revenue stream in perpetuity, which gets you to some really interesting. So the usual stuff around, you can go into the physical world, merchandise, you can do brand deals, but you can kind of create this community-owned brand with like Supreme. But really gets to an interesting point around valuation, where Andreessen Horowitz was reportedly in talks with the Bored Ape Yacht Club and valued them at $5 billion. So you've got this perpetual revenue stream which you can value, and then you've got the option value of the fact that what if this becomes the next Supreme? So think about that, okay? These unemployed writers from Miami just have created this entire universe, which just for some reason caught fire. And today, a year later, they're staring at like a $5 billion valuation for it.
So there's a quick question in the chat. How do they make money if they give away their tokens for free?
So the tokens are airdropped for free, but because these tokens are limited and people want to start cashing out, and this is cultural cachet, so you can list them on marketplaces. And so on the marketplace, somebody might just want to hold the token because they expect that the price is going to go up. And so that's how they make their money off of the initial airdrop, but the people who are holding the tokens make it off of secondary sales. And sorry, I should have added this context as well, Kanishk, which is the Mutant Ape Yacht Club serum, of which they made the $100 million. It had a minting price of, I think, 2.5 to 3 ETH, and ETH had kind of gone up at that time. And so think of that, like whatever, 20,000 multiplied by 3 ETH. That's what they ended up making from it. All right, I'll keep going. Costs, zero customer acquisition costs for now. Let's see how that changes as they want to expand and try and become a brand where it has to go beyond this initial 20, 30,000. Or maybe let's say 100K, 200K, 300K people know about the Bored Ape Yacht Club. They will have to spend on distribution in the real world. There's another concept here which running a bit short on time, but I think I want to kind of give you the top line of it. The hard value capture, which is back to this $100 million figure or the $2 million figure, which is what you made off of the primary sales or the perpetuity income that you're making off of secondary sales. That's the hard value capture that went straight to the creators. The soft value, which was promised to the collectors, was, hey, you can do these airdrops, which you can give you perhaps. You can create your own partnerships with other things, right? Because of the full commercial rights, or your own profile is raised. And so you can again sell it in the secondary market. And so the soft value aspect of it, that is right now going to the token holders. The problem with this thing is that as more projects, to the question that was asked earlier, as more projects come up and this space sort of becomes more competitive, I think any new projects would have to work off this model where you're sharing the hard and the soft value, where for instance, if you make profits by making those sales, it goes into a treasury for the club, and a portion of that treasury comes back as either profits or dividends. So this profit share. So you're rewarded instantly for believing in the community. The last thing I want to leave you guys with is long-term profitability at the end of the day is only possible through the growth of the community. If, for instance, NFTs fall out of fashion, if these art collections end up, not being valued in the future, a prime reason is going to be that the community just sort of dropped off. And you've had several examples where, the community, somebody ended up getting scammed, or the creators basically rugged everybody, and the value of the thing diminished overnight. And so you were holding essentially this worthless currency because nobody wanted to buy that project anymore. And so that whole reflexivity, which a cynic would term as the Ponzi aspect of all of these things. Well, Bitcoin is a Ponzi scheme because the positive feedback loop does come from there. And that Ponzi characteristic where you constantly need to have like somebody, the greater fool buy, or somebody else buying at a higher price, that dynamic is, I think, very core to crypto. And so I think calling it Ponzi and dismissing it instantly is I think you should think more about that in terms of what sort of business models are being spun out today. But you should totally be aware of the dynamic of the fact that these communities, essentially the strength of that community, is what is going to imbue the NFT with value, just like it did with Bitcoin, just like it did with Ethereum. Depends on how much the community can hold these things. All right, that settles it.
First of all, Shiv, thank you so much for the session, and everyone else, thank you so much for joining in such late on a Friday night. I hope you enjoyed it as much as I did, and I'll see you all soon.